Today we'll be looking at the cash book, just a basic example of how you prepare a cash book, right? We would have completed aspects of this lesson before, but just to re-emphasize or reinforce the basic concepts. Now, the accounting rules that govern the cash book, it's very important for you to remember them. Please remember that when we are completing the cash book, we will only be looking at the account from a one-sided approach. But please do remember that the accounting rule says for every debit entry, there should be a corresponding credit entry, and for every credit entry, there should be a corresponding debit entry. Okay? Now, we are going to be looking at the example that was posted in the WhatsApp group, and we are going to be doing that together. Now, I have pre-prepared the cash book here. Just let me write in the folio column. Now, please be reminded that the cash book has two sides. It has a debit side and it has a credit side. Please also remember that the debit side is our receipt side. So all monies coming in, whether they are cash or by check, are recorded on the debit side, and our credit side is our payment side. This side reflects all payments made, whether by cash or by check. So if a check is received or a check is paid, that amount is recorded under the bank column of the cash book. Okay, we are going to be looking at the example, as I said before, that was posted in the WhatsApp group. Now, one other thing I need to remind you of is that the cash book is an example of the company's current asset account, right? And assets are usually with the business for some period of time, and they aid in the operation of the business. These usually carry a debit balance. So we have here on the 1st of February, we have opening balances for the bank, $2,400, and for the cash account, $1,350. So we're going to record that. So it's February and it's 2020. We have the first, we have balances, and it's BF because this amount is coming from the previous month, which would have been January. So we have for cash, we have $1,350, and for bank, we have $2,400. The first entry is cash sales of $4,540. Now, cash sales mean that the company sold goods and received cash, right? So here it's a receiving, so it goes on the debit side. So we have here the third. Under the details column, we write sales and the amount cash $4,540. It's very important that when you are looking at each transaction, you reason them out so as to decide whether they should be placed on the debit side or on the credit side of the cash book. On February 4th, we have receipt of check from K. Scott, $1,600 rather. Now it's receipt from K. Scott check, right? So this is a receipt, so it goes on the debit side. The fourth, from whom? K. Scott, and it's a check amount for $1,600, so that goes under the bank column. Anything has to do with check has to do with the bank. Then on the 6th, we have received check from D. Pitts, $900. Okay, now we have on the 5th of February, we have payment to LT Wright by cash, $3,000. So here is a payment. So the payments made are recorded on the credit side of the cash book. Okay, so we have a payment here, so it goes here on the 5th. So we have February here 2020. The 5th, the payment is made to LT, right? And it is made GHT. It is made by cash. So it's placed under the cash column, $3,000. It's very important that you reason each transaction out just to ensure that you decipher whether it's a receipt or a payment, whether it's a cash receipt or a cash payment, a check receipt which will be placed on a bank, or a check payment. Okay, let us continue. So on the 6th received a check from D-Pits 900. So that's a receipt, money coming in the business. So it goes on the debit side. That's the date. The check is from whom? D-Pits. And check has to do with bank. So it goes on the bank column. And that's $900. Okay, our final transaction is a payment that is made by T.M. Davis for goods previously bought, and the payment was made in cash, $1,200. So that would go on which side? That would go on the credit side. It's a payment. So it's on the 8th of February. The payment was made by T.M. Davis in the amount $1,200. That goes under the cash column. Alright, so now we have entered all our entries in the cash book under the date, details, cash and bank column on each side. Now it is time for us to balance off the cash book. We balance off the cash book by finding the difference between the debit side and the credit side. Okay, so we will balance it off as at the end of the last transaction. So here we will total the debit side. So we draw a single line in line with each other and a double line to close. Okay, now if we add these two, we should get 5,890. And for the bank column, we should get 4,900. And the balance should be the same on either side. Okay, now from all indication, our debit side is larger. So the difference is on the credit side. Now this amount we call the balance CD, right? Which is the difference between the debit and the credit side. So our last transaction is on the 8th, so we write the CD as that. So we have balances CD. Now when we total the cash column and subtract it from 5,890, we should arrive at $1,690. Now realize that the business received payments in check, but they did not make any check payments. So the amount there is according to the balance on the debit side of $4,900. Now the balance CD will now become the balance brought down, and this amount will be taken over or be brought forward into the next month, which is the month of March. So we are going to have the balance brought forward as at February 9th. Balances brought down, balances brought down, that's the difference between both sides, 1,690 and 4,900. So this balance CD becomes balance BD at the end of the transaction period, and then this balance brought down will now become balance brought forward into the month of March. Okay, so this is a simple cash book just for you to record your payments and your receipts. Remember that once the business is in receipt of monies, it goes on the debit side, and once payments are made, it goes on the credit side.